Well, chip stocks today are a bit mixed. You can see that up there on your screen. Now, this comes after yesterday's rally following the news of the Stargate AI data center project announced by the Trump administration. Joining us now for the road ahead, not only for tech giants, but also for some of those chip makers, we want to bring in Rob Haworth. He's U.S. Bank Asset Management Senior Vice President and Senior Investment Strategist of Wealth Management. Rob, let's just start right there with the tech trade. Obviously, the announcement yesterday adding to some of that risk-on excitement. Will it last?
In the long run, yes, we think it will, right? The challenge here is artificial intelligence is really still in its early stages of its investment boom. And this includes, in addition to just building the architecture itself, building out the energy needs and the energy supply needs to support this over the long run. So we think that this has a long road ahead of it. We may be a little ahead of ourselves in price. A lot depends on what are the investments moving ahead, but we think there's room to run.
And what does that room to run then look like in terms of investor positioning? Where do you see the most opportunity for investors in specific names?
We don't really talk specific names, but obviously those that in the chip sector, right, have been early winners. We've seen some of the big technology names have significant investments. The next stage is really those income investments when it comes to the utility companies, because we really need that energy to start building out the data centers. And even though it's been a challenging couple of years here for real estate, right, data centers really are very important in this process, and there's more to come there. But then lastly, it will have to be the last mile, right? Ultimately, there are companies outside the tech industry, outside the utility industry, that have to benefit from this technology and make money from it. And so this is something we'll see that will start to work its way through the whole economy as we get to that last mile of who benefits from the usage of artificial intelligence, not just its production.
Yeah, I know you recommend a pro-growth strategy, and since you mentioned utilities, I want to jump on that. Does the utilities trade sort of become the next pro-growth tech-ish trade in 2025, given the focus on energy to fuel AI?
Probably not as much growth as we've seen out of the tech names, partly because it's such a regulated industry as we think about it overall. But given that interest rates have moved up so much, right, we think there's room for improvement here, especially for investors to gain some of that diversification, see some of that build out and benefit from some of that growth and demand, which remains significant by all estimations relative to our current electricity usage in this country.